How's it going, everybody? It's Stas here. So the stock market had a pretty interesting day today. Honestly, it was a very volatile day. S&P 500 down $12, down about 0.4%. The Dow Jones down $225, down 0.85%. And the NASDAQ actually went up $52, up 0.5% in anticipation of big tech earnings. We had Apple, Amazon, Facebook, and Google today, which we'll talk about here in a couple of minutes. And besides that, in this video, we're going to be talking more about the stock market, breaking down some technicals, going over where we could be headed here in the short term. And I also want to break down the top stocks that I'm looking to buy right now as we're getting into the month of August in 2020. And in general, I want to talk to you all about what I've been doing as of late in the markets and kind of where my head is at right now in the middle of earnings season and what I'm looking to do moving forward. So if you guys find value in the video, as always, I challenge you to get this video to 400 likes. So go smash that like button and also join our free Discord chat and Facebook group, link down below in the description box. And don't forget to claim your 2 free stocks. I talk about this every video. 2 free stocks from Webull, valued up to $1,400. All you have to do is deposit $100 using my link down below, and you get your 2 free stocks after a couple of business days. So let's get on with it, guys. S&P 500 today, again, ended up going down, and it actually went down $12, but the worst of it was earlier in the day. Earlier in the day, it was getting bad. It was getting bad, to say the least. S&P was down about $50 at its worst. Maybe more like $40. Let's not blow it out of proportion, but either way, $40-50, that's what the S&P was down earlier in the morning. And you can see, I mean, we took out big levels of support earlier today. We gapped up yesterday. We had a pretty strong green day, ended up closing at 32.50, and we were talking about how that was a pretty bullish close because 32.50, if we take a look on this 20-day chart, that is actually a point of old resistance. So I was thinking, okay, bulls closed above 32.50. That is very good. And we saw this morning, it didn't hold, guys. It did not hold. Actually, no, 32.50 was an old support from a couple days ago. And either way, it was a bullish close yesterday. And this morning, again, we saw that massive gap down. We took out 32.50. We did not hold 32.40 either. That was also a big level of support. And we actually went down to test 32.20. We actually took that out as well. That was a support stemming back from the 28th of this month. Twice we actually hit that level on that day, the 27th of this month as well. And after we broke 32.20, that's when we went down to 3,200. And the S&P held that. The S&P held that, which is where we actually triple bottomed on the 24th of July before breaking out and seeing that little rally this week. So that is a very good sign. The fact that the S&P held that earlier today at about 10 a.m. here Eastern Standard Time, that's telling me, hey, S&P is maybe double bottoming here and breaking out. I mean, this could be a breakout on the S&P. That's if we end up taking out 32.50 heading into the weekend. In my opinion, that's very much necessary tomorrow that we hit 32.50, we break it, we break the high from yesterday, Wednesday, and ultimately I think we should take out the high from, what was this, on the 23rd of July, about a week ago, at 32.80. And with how some of these big tech stocks are moving, we might take that high out tomorrow, guys. No joke. We might take that high out tomorrow if these big tech stocks remain green heading into tomorrow's session, as that will most likely influence other stocks and drag up the market in general. So if that happens, obviously, if we take out those levels, the bulls will be in charge even further. And the reason why S&P, the markets in general, dropped today, we got some GDP numbers. Well, one main number in particular, and U.S. jobless claims numbers. And if you guys remember, last week was the first week in, I believe, 16 weeks that the jobless claims number reaccelerated from the previous week, because ever since the crisis started, the numbers week by week have been slowly declining, which is good, which is great. But last week, again, we reported a reacceleration, and then this week, again, we reported a reacceleration. U.S. weekly jobless claims for a second week straight total 1.43. They rose for a second week straight, totaling 1.43 million people filing for jobless claims. And we also got a big GDP number. Data from the Department of Commerce showed that gross domestic product fell at a quarterly annualized pace of 32.9%, and that equates to about 9 to 10% drop for quarter two. But if you annualize it, that gives you that 32.9%. And that's just over the 3 months to June, and this was actually slightly better, believe it or not, guys. The forecast was about a 34% annualized drop, so it beat that, but still very poor, 32.9% annualized pace. That is unbelievable. That is the worst reading in 80 years. 80, guys, 80. That is 8 decades. That's unbelievable. So that's not good. That actually ended up dropping the markets this morning, that along with jobless claims, and then ultimately the markets rebound. If we take a look here, they rebounded. If we take a look at the Dow ended up doing the same thing. I mean, we saw about a 700-point drop from yesterday's peak. We broke 26,400. That was a big support I was looking at. But either way, it seems like we rallied back up and closed right under it, making it now a resistance to watch for tomorrow. So for tomorrow, watch 26,400 on the Dow. If that breaks, and overall on this 20-day chart, you can see if this little downtrend breaks, that is where we might finally see that rally out to 27K and maybe even above 27K for the Dow Jones, and especially with a lot of these earnings maybe influencing the markets in general. Like I said, we might finally see that pop and that retest at where we were, pretty much back in the beginning of June. Like I've said in these videos, guys, the markets haven't moved too much over the past 2 months. If the Dow ends up popping out of 27K, we're going to have a shot of hitting 27.5, which is the next big resistance. And of course, NASDAQ today up $50, like I said, in anticipation of big tech earnings, closing right at 10,700. Like I said in yesterday's video, that was a big resistance to watch. And with the futures up 215 points, we clearly broke out of that level of resistance. NASDAQ futures are trading at about 10,900. So this is very good. Now the NASDAQ is really a one shot away from all-time highs. One shot away from all-time highs, as we're now trading between 10,800 and about 11,070, which was that all-time high. So watch for that test tomorrow, anywhere from 11K to about 1170. And if we don't hit it tomorrow, watch for that level next week, and I'm sure we'll break down a bunch of levels in next week's video. So make sure to subscribe to the channel if you haven't done so already, and also smash that like button. Let's get 400 likes on this video. Now let's talk about some earnings reports. And typically I'd talk about what I personally did today, but honestly, guys, I didn't do anything again today in terms of my personal trading. And it's been a quiet week for me. It's been a quiet week as I've been anticipating many things. I mean, the GDP numbers. I've been anticipating big tech earnings. Also, the Fed meeting that we got yesterday didn't really move the markets too much. If anything, it moved the markets up a bit. But I've been wanting to see all of these different numbers and how it's going to affect all these things affect the markets before making any moves, which is why I've been quiet this week. And ultimately, I'm still holding some positions. I'm in Netflix at a little bit under $4.90 is where my average cost is. So I'm holding Netflix a bit here. It's up after hours, as a lot of big tech stocks are up after hours. I'm also holding Microsoft. I mean, we've talked about this. I'm in Microsoft at $200 and $200.50. So I'm up a pretty good amount on that position now, about $5 per share, as it's up a good amount here after hours as well. And I'm also in Workhorse Group, which today, guys, it actually went up to $17.50. Massive spike, whether that's a short squeeze. I don't know what it is. It could be a short squeeze or some secret insider stuff's going on that we don't know about, but we got a big pop, $17.50, and we're trading right around my average cost now at about $16.40. And ultimately, I think Workhorse is going higher. Otherwise, I would not be holding the position. And with today's massive pop, we're finally showing some upwards push out of that 1640 resistance, which has been a resistance stemming back for the past couple of weeks at this point. So if we take this out, which we did earlier today, we didn't end up holding it, or we actually are holding it as a support right now. But either way, the next level I'm looking to go to now is $18. So from $16.40 to $18, that is where I'm looking to make a move here on Workhorse. So let me know down below, guys, what are your thoughts on everything, trading, the markets in general, earnings, GDP numbers, where the economy is headed. Let me know down below in the comments section. Now, let's get into the juicy stuff. Let's get into what everybody wants to talk about, me included here. Amazon, Apple, Google, Facebook, Mastercard as well, and UPS. Let's break down some earnings reports. So Amazon, guys, you have to understand, when you're looking at growth companies, you're looking at top line. Revenue is the most important when you're looking at growth companies. EPS is secondary. EPS can get manipulated from share buybacks, this and that. Accounting, you guys have to understand, accounting can be manipulated. Look it up. We can't go over that in this video. That'll be too long. But EPS can be manipulated. Revenue, not so much. And when you're looking at growth companies, Amazon's a growth company, everybody's looking at that top line. And Amazon today, guys, which is why you're seeing it up $150 after hours, it was up even more. It was up to $32.60 after hours, so that's $210 of a spike. You're seeing this because they destroyed revenue. Revenue came in at $88.91 billion versus the $81.53 billion. So right off the bat, seeing that number, the stock goes up. Again, revenue is so important for growth companies. And what other things do stocks like? And in this case, what do investors like, since investors and traders push up stocks? Investors and traders, they love seeing guidance raised and guidance being higher compared to estimates. And Amazon sees their quarter 3 revenue between $87 and $93 billion for the quarter we're in right now versus the $86.29 billion. So estimates were $86.29, but they're expecting $93 billion on the high end. So if they end up hitting $90 billion, $95 billion in this quarter, that's going to be another amazing quarter. So those two reasons I just stated, the guidance and that massive beat in sales, that is why Amazon's up. Those are really the main reasons why Amazon's up. A lot of other reasons could be contributing, some small other segments of the business doing well, but for the most part, it's that revenue beat and that guidance. And EPS came in, I think this is GAAP EPS, GAAP. It came in at $10.30 versus the $1.56 estimated. So EPS was about 5 times what was estimated, which is incredible. I'm not sure. I have to dive deeper into that. But I know Google did share buybacks. We'll talk about that in a little bit here. But yeah, that's kind of what we're talking about and seeing when it comes to Amazon, and I'm very happy with it. I'm an Amazon shareholder in my long-term portfolio. I have shares across the board and some different accounts, and I'm loving that action. And after hours, again, we're up to 3260, which if we pull back a bit, 30-day chart here, take a look. We're approaching resistance from back on the 21st of July. I know you guys remember that day that we had a massive rally in one single day. The NASDAQ was up. All tech stocks were crushing it. That day, Amazon went from 3K up to about 3260, and that is a level that I expect, honestly, to take out eventually. I think we're going higher, especially with this earnings report, especially with this strong guidance, stimulus potentially coming in the next couple of days here, in the next couple of weeks. I think Amazon is going to go higher, above 3260. If that takes out, 3340 is coming up. That is the all-time high on Amazon. I expect, again, we're going to go higher on this stock. $3,500 I think is where it's headed. That's actually a price target one of the analysts put on it, and I think that's a pretty strong price target. I think that is honestly where it's going. Now, Facebook, they reported today as well. EPS came in at $1.80 versus $1.39 estimated. Revenue came in at $18.69 billion versus $17.4 billion. So they crushed EPS. They crushed revenue, and the stock is rallying like crazy. Let me extend this to the right. Let me show you. We took out 240, 245, 250 easily, and we're at an all-time high. Let me double check. Is this an all-time high on Facebook? Let's go on the 4-hour chart. It is. It is an all-time high on Facebook. So at this point, guys, take a look at what ends up happening at 247, 248, 250. Do we end up showing support at this old resistance and end up, holding it for a little bit? If we do, this could end up being an entry point. And if 248 breaks, we might be going down to settle around 240, 245, which could also be an entry point when it comes down to Facebook. So overall, very strong numbers there. We can dive deeper into the earnings, but the video would be a bit too long. So feel free, as always, guys, I encourage you, dive in and do your own research when it comes down to all of these companies. Please, do your own research, do your own due diligence, as always, because we can't go over every single detail in these videos, or trust me, guys, every night I'd be uploading an hour-plus video, which in my opinion is a bit too long. So Facebook did very well. Apple also did very well. Just big tech across the board, guys, is just unbelievably green right now. Apple closed at 384. Now it's trading, or it actually hit a high at 407 after hours, so it went up $23 after hours here. EPS came in at $2.58 versus the $2.04 estimated. Revenue came in at $59.7 billion versus $52.25 billion. So they crushed EPS. They crushed revenue. Now the stock is running. And let's take a look and see some of the little segments here, if we can get some of the segments of the business. You can see, Europe revenue, $14.17 billion. America's revenue, $27 billion. Products revenue, $46.5 billion. iPhone revenue, $26 billion. iPad revenue, $6.5 billion. Services, and guys, if you're looking at Apple as a long-term investment, one thing you have to look at is services, because this is what they want to expand. They don't want to be strictly an iPhone company. I think that's obvious at this point. They want to build out the services, and services came in at $13.16 billion, which is incredible. That growth there has been pretty solid over the years as they've been transforming their company, which is great, because I love seeing companies themselves being diversified. I don't want Apple to be too heavily reliant on the iPhone, and this is why I love Microsoft, to be honest. I love Microsoft because not more than Apple. It's kind of head-to-head. I'm not sure. I'd probably still pick Microsoft, to be honest, but I love it because it's very diversified within the business. It has cloud that's growing very quickly. It has Xbox. It has all of the products, the hardware, and so much more. LinkedIn, so much more, guys. But yeah, either way, tech is crushing it at this point. Apple is up a big amount. And honestly, I'd look and see if it finds support around 398, 400. I'm thinking it does. And I don't know if the markets, we're in a funky spot now because are the markets going to go higher with these tech stocks being up? Because in that case, we might not even see a pull down in these tech stocks. They can just keep going up at this point and find a new high, maybe 420 on Apple. Who knows? We could just continue going up, and only time will tell at this point. And Google ended up reporting as well. GOOG, they're actually pretty much even at this point after hours. EPS came in at $10.13 versus $8.21. Estimated revenue came in at $38.3 billion versus $37.37 billion estimated. And they actually did a $28 billion stock buyback here. And if you take a look, some of the ad spending here, which is why the stock isn't really rallying like crazy as much as these other tech stocks today. Ad spending still in a rut. You see some of these updates here. Some of the numbers aren't too attractive when it comes to year-over-year growth, from what I'm seeing here. So watch out for that. I mean, reflected gradual improvement in ads, strong growth. We're seeing strong growth in Google Cloud and other revenue, but I think ad spending is kind of what is keeping the stock down right now. We'll see what ends up happening tomorrow, but at this point, Google, they had a pretty solid earnings report, but it seems like the revenue is just not as impressive as some of these other tech stocks. Let's just put it that way. And Mastercard today, they ended up reporting, Mastercard ended up doing EPS of $1.36 versus $1.16. Revenue came in at $3.3 billion versus $3.25 billion. And the quarter two gross dollar volume was down 10%. Purchase volume was down 9%. And I think looking at Mastercard, Visa, these companies that process transactions, this is good to see how consumers are spending, right? And again, their gross dollar volume was down 10%. I believe that's year over year. And they define gross dollar volume as the figure that represents the aggregated dollar amount of purchases made and cash disbursements obtained with Mastercard branded cards and the impact of balance transfers and convenience checks. So 10% down year over year. It's not that bad, but it's not growing. And it's obvious because we're in this crisis. It makes sense. People aren't transacting as much. And for me, I'm looking at Mastercard as a potential trade up to 315, 320. That's kind of the range that I'm seeing it's in right now, as you guys can see on this hourly chart. And a company that arguably had the best earnings report here is UPS, up 14% today, up $17 per share. They actually reported EPS of 2.13 versus the 1.07 estimated, guys. They almost doubled what was estimated in EPS, and revenue came in at $20.5 billion versus the $17.48 billion. And why is the stock moving so much? It really is, because UPS said its average daily shipping volume rose 21% in the quarter, faster than the company has ever recorded, with a 65% increase in shipments to homes, guys. And we saw a good report from Fedex a couple weeks ago, and now we're seeing a fantastic report from UPS. And this is good. This is good stuff. I'm looking at this not as a trade at this point, but any sign of a cool-off, any sign of a pull-down, I'm interested in getting into UPS. And speaking of FedEx, guys, FedEx actually was up 2% today. And we finally took out $170, which I've been on the channel talking about this. This is a big level of resistance. If the bulls take it out, that is a very good sign that could send the stock higher. And we're seeing that now. Big resistance taken out, guys. And it's pretty much stemming back. You can see it here from this past year. I mean, back in October, we failed there at 170. Back in November, January as well, and February. So this is a good sign. And I'm seeing, guys, no joke, I can see Fedex go to the mid 170s, 180s, and if we pull out this 3-year chart, you can see Fedex has even more headway to go. I mean, they're really still battered down. The stock's all-time high is 274. I mean, we're $100 off the high. That is incredible. So from 170 to 180, 185, that's kind of where I'm looking at it at this point. Then from there up to 198, 200, that is the ultimate target here. So Fedex, FDX, I think there's a lot of potential in this. I might pick up some shares tomorrow. Beyond Meat, guys, Beyond Meat, BYND, down 3% today almost. I'm liking it at this point, but it has not shown confirmation. I'm liking the fact that it's holding 123 to 125. That's generally it was a resistance back from the beginning of this year, stemming to about March. So for the first couple months of the year, it was a resistance at about 125. It was a support back in the middle of May. So at this point, guys, I mean, if we hold 125 and rally out and we break this downtrend that we're clearly in on this hourly chart, we're clearly in it on the 30-day chart as well. You can see that. I'm thinking Beyond Meat can rally from there, and they have earnings here on the 4th of August, so if they do well, that could be a good sign for Beyond Meat to send it higher. So watch for these moving averages, watch for this wedge that we're in, watch for everything above $130. If we make that move, it could pop even higher. So that's Beyond Meat. DKNG, I'm watching this one as well with MLB going on right now. MLB's looking like actually, I know the Marlins are having a problem right now, but with MLB just in general, sports are slowly kicking back in here. I mean, this could be one worth watching. We saw a bit of a sell-off here from $40 down to about $35, but ultimately we're holding $35. That's why I'm interested in it, guys. We're holding $35. This has been a support. So if we end up taking out $36, $37, we could be making that move back up to $40. And another dip I'm liking here today is Cake. Cake as in Cheesecake Factory. And let me tell you guys, I don't think I told you this last time we talked about the stock. I got 2 pieces of cheesecake there like 3 weeks ago. What did I get? I think it was like it was like an apple pie, cinnamon cheesecake, vanilla. It was unbelievable. And I also got, oh no, this was even better. The salted, what's it called? The salted caramel. If you go to a Cheesecake Factory, guys, trust me, get the salted caramel cheesecake. I'm telling you, you will love it. And what I'm loving here on the stock, besides the cheesecake, is this pull down from $27.30 down to about $25 today. We held that 50 SMA on this hourly chart. Now we're looking to see if we take out $25.60, which is a big resistance, stemming back. You guys can see it here, stemming back from the middle of June. Actually, no, wrong. Stemming back from the end of April, also in the middle of June. Yes, I was right there. So if 25.70.60 breaks, you can see the next gap to fill, which we did literally yesterday, the day before, is $27. So I'm thinking from 25.60 to 27 is the move here. That's around 6%. So that's kind of what I'm looking for tomorrow. And honestly, I see Cheesecake Factory going even higher, maybe up to $30 per share. That's ultimately my target here on the stock. And Tesla is another one I'm watching. It's been a bit quiet here, but still holding around $1,450 to about $1,500, which is kind of where it's been struggling recently. And I'm looking at it anywhere above $1,500, $1,550. I think that is where we might be going back up to test those levels pre-earnings report. But ultimately, I'm just looking at it in this range to see what direction it does end up picking. And gold stocks, GDX in particular, which is an ETF here, a gold miners ETF, is finally pulling down to a point where I might end up buying up some shares here on the dip. we can see 45 bucks was the high. We pulled down now to about 41.60. That's a pull down of about 7%. We're holding the moving averages here on the hourly chart at a higher low. All of this time frame here, you can see every pull down, we've held the moving average. So this very well could be a dip buy, right? If we end up popping into 42 bucks tomorrow, I might pick up some shares. And yeah, that's pretty much it for this video. I feel like we talked about a ton in this video. If you all enjoyed it, hit that like button for me. Like I actually said earlier, I'm challenging you all. 400 likes. Let's try to get 400 likes on this video, and make sure to join our free Discord, our free Facebook. That's linked down below, as well as your 2 free stocks. They're waiting for you. They're simply waiting for you. All you have to do is deposit $100 into the account, and you get 2 free stocks from Webull. So I'll catch you all in the next video. Thanks for watching as always. And most importantly, guys, stay safe out there during this crazy time period. Please stay safe. I'll catch you all. Thanks for watching as always. Peace out. How's it going, everybody? It's Stas here. So